I'm joined from our Melbourne studio by Dale Gillham. He's the Chief Analyst at Wealth Within.
Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to Wealth Within Live, the Australian stock market show where you can ask the questions and we give you the answers about all things investing and trading. Now tonight, I'm Janine Cox, Senior Analyst here at Wealth Within, and helping me tonight is Dale Gillham, Chief Analyst at Wealth Within.
Hi,
Thanks
everybody.
for joining us, Dale. This is Australia's most trusted stock market educator.
hi everyone, I love Tuesday nights. They're a lot of fun and it's always good to be back again. We've got some fantastic information for you tonight, so pick up a beverage, grab your best friend, sit on the couch and start typing messages to us so we can get your thoughts on the stocks that matter to you. Now, to get the most out of tonight's show, it is important that you're actively participating and not just a bystander. So you get more out of the show the more you personally put into it. So get active and get involved, as they say, and this means asking us all of your most burning questions.
So tonight, as always, our goal is to share with you how you can become more profitable in today's market. So it really is important that you tell us what you want. Also, there's a chat box off to the right of your screen, so get typing and ask us your questions. Now, Dale, whilst they are doing that, I know that you've been doing some more polls lately, so that we know more about who's watching us each week. So you've got some good things coming up to tell us.
I got some awesome stuff. It's actually quite surprising what's on those polls. But in the latest poll that I did, so hopefully people that are watching got onto it, I asked everyone how many hours they spend each week researching and looking at the market. And we've had a really good response to it. Now, I have a chart that shows the results. So if the team can bring up the results, we'll actually have a good look at it. So you can see on the screen now that 42% of you that you're actually spending more than 6 hours a week researching or looking at the market.
6 hours a week? I'm surprised by that.
I know.
Really?
I know. 6 hours a week researching and looking at the market, and hopefully 1 hour of that is watching our live show every week. So they've all put your thumbs up. Yes, we're watching Dale and Janine every week for at least an hour. 25% said they spend 4 to 6 hours, and 32% said 2 to 4 hours.
Yeah, I'm really interested in those statistics for a couple of reasons. One is because you've got to ask yourself, how are you spending that time, and are you spending it as effectively as you could?
Well, that was my question. It's like, often when I'm chatting to people on the phone, I go, oh, okay, so how much time do you spend looking at the market now? Because they say to me, hey, Dale, I don't have time to do your course. I go, well, what are you spending your time on right now? And they go, this and that. And I go, well, how much time is spent on understanding the market, researching, reading books, looking at the web, watching YouTube videos, and the list goes on. And so often people say, 6 to 10 hours. It's so common. And I said, well, then you have time to do our course. Yep. You know, it really is, because when I'm chatting with them, I ask them exactly what they're doing and what they feel they're getting out of it, or their perception of the value of that. And a lot of things that the people that are uneducated value, you and me value very low on the priority of what we would do.
But that's natural, because we've been there. You know, we started, everybody's got to start somewhere. And I remember when I first started, I spent a lot of time reading stuff. Now, I mean, how important is that to your development? There's a lot of information and a lot of people's opinions out there, but how is that really educating you and propelling you forward? And it made me think about the GFC, going back and after talking to quite a few people back around that time, going through the GFC and either having read a lot of information and got tips, and that was the way that they were buying shares, or they had someone investing for them, so maybe in a unitised fund or a financial advisor. And then after the GFC hit, they realised that they didn't know any more than they knew, 4 or 5 years earlier, and yet it had cost them money, either through the trades that they'd lost on or through the fees that they were paying, and they weren't any better or further ahead. And I think that's really sad. And we know from data and looking at history on the market and people's psychology that people will repeat the same things. So, there's some more interesting stuff that you wanted to talk about the stats tonight, isn't there? And that leads into that.
But just a little bit more on that. I had a gentleman on the phone. He was telling me how many hours he spent, and I said, "Okay, what's your hourly rate at work? What do you get paid at work?" And he told me, and I said, "Okay, now multiply that by how many hours you spend doing what you're doing, learning about or researching the marketplace, and how many weeks would it take you, or how long would it take you to pay for our course on those hours?" And I think he said 3 months max. The amount of hours he was spending on the marketplace, because there's that old 80-20 rule that we were chatting about the other day, and I'd say, and just because I chat to people so often, it's not funny, like every week I'm talking to beginners and traders, whether it's on email or chat, and a lot of times on the phone. I do talk to a lot of people on the phone, a lot of people wanting to get into the markets. And my guess is at least 80% of what people are doing is pretty much wasted time. It's not effective time. It's not good time that will help you get better trades. It'll not teach you how to be better traders. What I find is most people are saying,
structured.
Well, it's not structured, and there's no process there, because the comments that I get from people are, I'm still confused, I don't know what to do, I'm inconsistent in my trading, I have all these little losses, and then occasionally I get a win, and and I worry when the market's falling, and I'm worried about this, and I'm not really sure what I'm doing, and that's what I mean by 80% of what they're doing is just not helping them. It's actually making them more confused about what they should be doing. But as you said, this brings us to the next little piece. So I've got some more.
So in terms of the statistics then, what did it point out?
Well, we know based around the 50% of those people watching our YouTubes are trading more passively. So we know that. We know that stuff. And about another 44% are trading. We also know that around 83% of those watching are either a novice or have been trading less than 12 months.
Yep. So the polls are indicating that the majority of those watching are quite inexperienced and generally spend 6 hours plus a week trying to get experience. Is that what you're saying?
Absolutely. Absolutely. So they're more beginners, they're more inexperienced, and they're spending 6+ hours a week trying to get that knowledge and experience. But really they're trying to do it without a GPS. Like, there's no roadmap for them, and so they're just getting disparate pieces of a puzzle. And it's like, I often say to these people is, if I gave you a whole bag full of jigsaw puzzle pieces, but no picture, no box, no nothing, and there was just all this thing lumped into this bag, could you make that picture? If I said to you there's 4 different jigsaw puzzles there, it would make it absolute nightmare of what you were trying to do. And that's really what a lot of people are trying to do. They're trying to put this jigsaw puzzle pieces together, and they don't even know that all the pieces are there, and then they don't even know what picture it is to actually put the pieces together. And that's probably the easiest analogy I can make about how people talk to me about how they're going about getting better on the market, whether it's investing or trading.
I mean, I've even had people who were trading really well, of course, during the GFC because it was easier to do it.
Oh, well, yeah.
And then the market crunched and they got a bit of a shock, because you might end up, if you're spending lots of hours just reading information and trying to pick up on what other people are doing, then when it comes to the crunch, you don't know how you're really going to handle it. And this guy, he thought he was doing brilliantly, and in the end, he saw it as a failure anyway, but it really isn't a failure. It was actually the kick up the bum that he needed to actually go out there and get something, do something, and have something structured around what he did. And so he was trading a few months of the year and then taking the rest of the year off once he'd actually got the structure behind him. He said thank you to Dale and I for helping him to get to that point where he had that structure. And I think that's what a lot of people need, and they don't realise it.
Oh, look, it was 100% accurate, and I don't my report next Monday, I've already just written my script for next Monday's market report, and it's exactly on that. It's on 7 strategies to reduce your risk, because exactly that. Because it really is getting structure and process and strategy behind you. And that story, I could probably give you 1,000 stories like that of people that come to us and their trading's a mess, they've lost lots of money, and we've just turned them around. Because people say to me, how can you help us, Dale? And I go, easy, we just fix it. That's what we do. We fix traders. And that. So what's the next little bit we've got there?
Look, I just wanted to say that I appreciate the fact, I know you guys probably do, but I appreciate the fact that you're doing these statistics, because one, it shows that you actually give a damn about who's on the other end of this and watching it, and it helps us to deliver better information to you. If we can give you that inside information that's going to put you in a better position to profit going forward, that's what we're here for. So, Dale, in terms of the audience watching, 90% of those watching our channel are male.
Seriously?
Look, it does.
That's probably because of you. You're better looking than I am.
I don't think it's got anything to do with it, actually. It doesn't surprise me, guys, because when I started learning many, many moons ago, it was no different. Like, there were probably 2 women in the room of about 40.
Yeah.
You know, in the different sessions that I went to. And
I remember that.
Yeah, so Dale was running a few of them. And look, you know, 65% of you are 25 to 34. So this is, to me, is a huge opportunity, awesome opportunity, because the younger you start, the better off that you're going to be in the long run. I mean, when we get some young people who are studying with us, we get so excited about it. And some of the youngest that we've had, I remember one lady, she had a 15-year-old son, and he was actually learning through her, and she'd done the course, right? So he was learning, and teenagers can actually identify some of the things that we talk about on the charts in terms of the patterns, because it is pattern analysis once you know the structure behind it. And anyway, you know, so with the 25 to 34-year-olds, if you can actually start doing this really well now, you're going to be retiring, you know, in 10, 15 years and not have to, you can do whatever you want to do. Some of you might even do it much sooner than that if you get started quicker.
Oh, look, 5 to 10 years max, you'd be trading full-time, earning your income and everything else. But that really does explain a hell of a lot, you know, the 25 to 34-year-old males. And it explains a lot about the comments that we get, the stocks that people are looking at. And often when you're a 25 to 34-year-old male, you tend to be a little bit more bulletproof, or think you're more bulletproof. But really, you need. It's when I was quite young, probably at 18, and I had a mentor, and he said, "Dale, when you're in a room with somebody who knows what they're talking about, just shut up, listen to what they say, and then do what they say, because they've already done it before." And that's really what I suggest to you. And it's saying, if we're making sense to you, we're doing it, we're saying it because it actually does work. We are professional traders. We do trade on behalf of clients all the time. We manage tens of millions of dollars in clients' portfolios, so we don't play around it. We're not sitting in T-shirts in our bedroom telling you how good we are, you know, because we've got an iPhone in our face saying, "Hey, look at me, I can teach you to trade." We actually do it. And really, when somebody who's experienced is telling you what the right way is to do it, the best way is to just shut up and do it and really follow that advice. And I'm amazed at how many people don't follow Buffett's advice.
Well, look,
constantly.
I'm amazed that you guys have all that time to do this, and I think that's awesome. But I'm also constantly amazed at how much time people must have to be able to get involved in all the things online that they get involved in.
Yeah, absolutely.
Because, I mean, when I was younger, I was flat out in my career and I just wanted to excel, and so I didn't have a lot of time to muck around. I had to find what was going to get me there quicker, and I worked it out pretty quickly that, you know, reading magazines, papers and looking online, searching is not going to give me the answer. I just needed something that was well structured and a path, really, because that's a platform to go to the next level. But anyway, I think we're going to move on now to a
The chat's blowing up here. I've got to go and fix this, so you better talk about
you better
something.
look at that, because everyone's gone crazy. Thanks, guys. What are your thoughts on Aristocrat Chew? We've got a few stocks out there today. Now let's move on to a comment that we received from someone. This is one from Lily Doe. Oh, Lily, thank you so much for sending this in. So she's very new to trading and found the content informative and easy to follow. Thank you. What are your thoughts on EBOS? So if we can get the charts up, we'll take a look at it now. And whilst we do that, Dale can get to work on the chat.
I'm going to be busy for an hour here doing this.
Okay then. So there we have it on the screen. There's EBOS Group Limited. Now, as you can see on the screen there, look at the monthly chart. You know that we show you the monthly chart each week. Now, look how patchy the data is on the monthly chart, particularly at the start. You can see it. When you see this sort of liquidity, low liquidity, there's almost nobody in it. I mean, I'm looking at the weekly chart here, and look at the bottom of your screen. You can see the volume there, and that volume is so low. Multiply that by the value of the stock, and you're talking about almost nothing. You could move the market easily with trading this stock, or you could end up sinking your capital really quick if the buyers ran out. So the idea is to trade stocks that have higher liquidity, so that you can actually get in and get out at the price that you want to. And that's one of the most important things. And look, I saw that firsthand when the GFC hit, how interesting it is to see what happens when the market falls quickly, watching the depth and the traders pushing their trades through. Now, looking at this stock, look, my thoughts on it are that, it's not a stock that I would suggest that anyone buy, personally. Look, some people pick certain stocks because they've got ethical reasons for wanting to do it, sustainability, environmental, one thing and another.
I have one reason, make money.
Yeah, well, but if you want to make money, don't pick these particular stocks. I'm not saying that you couldn't make money on it. I'm just saying that your risk multiplies significantly because of this low liquidity on the share, and you can see it just in the nature of the price action on the chart.
Yeah, but you've got to look at, like I was saying last week, is there's an inverse relationship between knowledge and experience and the quality of the stocks people buy.
Oh, that is true, yep.
And it is just amazing. And it doesn't matter whether it's a stock market or whether it's property or other things. Those with the least amount of experience make the biggest mistakes in investing. And to me, when you're looking at the stocks, we can look at this list of the chat list, and we can actually tell which people are a student without even putting their name on it because of the style of stocks they're choosing and what they're actually saying.
Plus, I remember their names.
Well, no, but I'm just saying, if you took the names off and how they actually say what they're saying and the stocks they're looking at, I often see posts on our Facebook page or on the YouTube channel on some of the things, and I go, yeah, you must be a student the way you're writing. And other people, when the way they write me the questions are what they're actually saying, I know they don't have a high education or they're not highly experienced in the marketplace. And that's really what I'm saying.
Yeah, but what you're saying is that experienced traders wouldn't trade the stocks, so it stands out for you.
Yeah, absolutely, because experienced traders know that their job is to be a risk manager, as we've talked about a few times. But that's all about having a plan and a strategy and process. If somebody just says, Dale, is this stock a buy, then I know they're not really a trader in our view, because I don't ask anybody what to buy or sell, and neither do you.
No.
Because we actually know how to do that ourselves. So
well,
we've got some more stocks,
when we started, I mean, I can remember following a particular broker when I started. I mean, that was a long time ago, and then I realised that wasn't going to get me anywhere. That was only a little while ago.
You're not that old.
Okay, thank you. All right, then, we've got some more stocks here for you. We've got DTL. Let's have a look.
DTL was Mick King, isn't it? Can I read that?
Yeah, Mick King.
I'll read it. So you send it on our Facebook page. Like we put a post up, so if you want to actually look at it. So Mick King. There's a whole heap of posts here on the chat. I might do those while you have a bit of a look at it. Okay. Mick says, "Hi Dale and Janine. I think DTL or Data 3 chart looks interesting at the moment." I understand. Like, looks interesting. What does that mean? I've held this for a few years now from much lower level. It's a little illiquid. Don't drop my iPad, Janine. It's a little illiquid, but still has a decent yield. Could you give us your views if you have time? Of course, we've got time, Mick. We'll fit everybody in, I believe, or we're trying to anyway. Once again, looking forward to tonight's webcast. So having a look at that. So on your screen is actual Data 3 at this point in time, and as you can see, it is moving up in terms of the stock price. So it is looking up quite nicely. It's moved up since that September low. And Janine's got the mouse, so I can't move it for you. But it is looking quite nice at this point in time, and I think it's probably likely to continue on at this point in time. It is a little bit illiquid. I mean, you're looking at $1.90 or around about $1.90. There's low volumes at the moment. But I don't think there's any reason why it's going to slow down. It is getting near to that all-time high around that $2 mark, so that's going to be a level of resistance. But you can see here how it's filling that gap over there from 2017.
What you're really looking for is these higher troughs as it's moving up, is it making these higher troughs? And once you get that under there, it becomes easier to set your trailing or your profit stop or its trailing stop loss to keep you in while the stock's running and then get you out when it stops running. So that's a good one. We've got another one too that came in from Facebook. What was that?
That was Stephen Watson.
That was Maya, wasn't it?
Yeah, Stephen says, I'd like you to take a look at Maya, MYR. I've been keeping my eye on it since around 48 cents. And he's also talked about Lend-Lease as well. So we'll look at Maya for you. I've been keeping my eye on Maya as well because it's been just absolutely hammered down to that low back
now
last
notice
year.
how I changed it from a dash line to a solid line?
That's very good. I wouldn't yell at you anyway.
I'll just yell at you. All right, so here we've got a trend going up, trend going down. We've got, as Dale talks about in his book, you'll find if you're following the book, you'll see that once you get 2 closes above that trend line, there's an entry signal. So that happened, one close was here, February 2019 and March 2019, and then you might have been able to get in there, even if you got in at the end of the following week because you wanted a bit further confirmation. Still a nice rise on the stock following that trend line entry. So look, I think we've got time for one more. Michael Butler.
Yeah, I'll just read it here. Yeah, Michael says, hi, Dale and Janine. Would like to know your thoughts on PNV. Polynovo Limited. Thank you. Your book is great. Great educational tool, Dale. Thanks very much, Michael. I'm glad you love my book. So go out there and tell your friends about it. A couple of other comments we've got. Where is it? Ian says, hi, Dale and Janine. Thanks again for the live show. Our pleasure. Shane says, good evening, Dale and Janine. Have you taking up dancing? Why? Because we're both in red. I think that's what he's saying.
Todd Martin. Did you get Todd Martin?
Todd?
He said that you mentioned May is a month of downward trends. Is that the whole of the market or just certain sectors? Well, that tends to be when often, because coming into the end of the financial year, brokers are putting out reports telling people when to sell. And they're saying if you want to, offset capital gains with some of the losses or stocks that are in loss, then now's a good time to do it. So often what happens is that people rush to sell their stocks for these so-called tax reasons, but it's for us, selling to try to offset a gain is never a reason to sell. You have a plan and a strategy and not just deciding, okay, that's a reason to sell. It's not a wise move.
No, and I think you need to keep things in context. I didn't actually say May was going to go down or was the trend down in May. What our market does is it makes two rises and 2 falls a year, roughly. And so the high can be March, April, May, and then it might move down into April, May, June. Then it'll rise up into that third quarter and come down into that last quarter. So it could be lows in August, September, October or November. So it just depends on where the highs are or where they appear, where the lows are going to appear. So it's really easy for people, and it's quite constant that people take a word or a sentence out of context, that whatever Janine and I say sometimes we go, oh, we blurt. And then people go.
It's a good discussion point, really.
It's a great discussion point, isn't it?
So, yeah, thanks for raising it. Because, look, often what happens is the funds tend to sell off stock towards the end of the financial year. They're no different to, in my opinion, sometimes people who don't know to do any different, sorry. And then in July, if you notice, sometimes what happens is there's a reshuffle of their portfolios and often there's good buying that happens then. So keep an eye out on that as well. So thanks for that question.
Yes, that was a really, really good question.
We've got another stock here. Let's do the PNV one because we really haven't covered it properly, done it justice. So around about that dollar mark, we can see where it's traded to recently. Now, a dollar can be a psychological resistance level. So whole numbers, $1, $2, $3, sometimes 50 cents, depending on what the stock's trading at. So just see if you can see a rhythm over the history of any stock that you're trading to see what sort of rhythm it's running to. And looking at the share now, there tends to be a bit of resistance around that point, that dollar mark where it experienced it in the past. It stopped there. It doesn't mean that it'll stop there every time, but it just means this is a warning sign. So when we talk about support and resistance, as we're teaching people, we say, look, that's a warning sign, so it's something to watch. And you're watching for things like reversals, exit signals that may happen after that on the chart. Now, at the moment, it hasn't given any signal. It's still bullish and strong. The only thing we can see here is it's starting to slow down a bit. So we've got a bit of a slowing in the rise there, which is natural to expect after such a huge rise. Let's have a look at what it did last week, Dale. We can see that it was up by about 18%.
Massive, isn't it?
Yeah, so that can happen. But look, you can get excited about a stock that's going up, can't you? But look how far when it does fall, what can happen. And this is what you've always got to be thinking about when you go into a stock is not how much I can make first, but how much am I risking. So that's the thing.
That's the real key, though, isn't it? We find a lot of people talk to us about stocks. Oh, this has done this has done that. And they think that the stock's going to do that again. But nobody ever talks to us about, oh, that's high risk because it could fall this much.
Yeah.
And I don't get anybody, unless they're a good trader, they don't talk about that.
Well, the interesting thing about a stock like this too is its history showing that you've got to be patient with it because it tends to run sideways for a pretty lengthy time, for a year at a time. Look at it across here as well.
Oh, it's massive, isn't it? It goes sideways. So again, buy and hold. Would you do that?
Well, FMG made some really good gains and it's a much better stock. So.
So much better stock. It's much more predictable anyway.
But look, if you're holding it, there's no reason that I can see at the moment to sell it unless you've got a plan that says otherwise. So looking at that, we're going to go off the stocks now and move on. So let's get off the chart and take a look at something interesting that I wanted to share with you. It's actually a video of Dale presenting at our Art of Trading event last year. And this event was for students and graduates of our accredited courses, and it hasn't been published anywhere. So this 4-minute segment is a small part of our Friday night session, which I absolutely loved, and because it used to run for the whole weekend. We would run it Friday night, all day Saturday and all day Sunday, and have a dinner on Saturday night.
I loved them.
So you were just warming up in this one, weren't you?
Oh, I'm just getting started, lubricating the larynx.
Yeah, so have a look for now, and then when we come back, we want to talk to you about what all this means because it's really important that you get this, okay?
Are you where you are today what you thought you would be 5 years ago? Are you in a much better position today or you're not? And that's a question you need to ask yourself, isn't it? And all that's happened in that last 5 years is you've made choices that are either the right choice or the wrong choice, yeah? It's either yes or no. So make the right choices and you'll get to where you want to go. So accelerating wealth, to me, the goal is really to maintain or improve our current lifestyle so we can lead a balanced and fulfilled life, isn't it? Accelerate your wealth, because wealth is a lot of different things, isn't it? It's not just money. We can be wealthy because we've got a great family, yeah? Or we're in a great community, or we live in a great country. They call Australia the lucky country. Sometimes I'm not so sure, but we're wealthy because we live in Australia, yeah? I go overseas. I've travelled to China and Japan and Korea and US and all parts of Asia and Europe and everything else. And when I come home, I go, gee, I'm glad I'm home. Yeah? Who does that? We're wealthy because we live here and we get opportunity. So to me, it's about whole lifestyle and whole balance thing. So to me, went the wrong way. Okay. So your goals could be influenced by many things, can't they? So these could be your age, your income level, the size of your family, the current wealth you have. And really what your goal is what you can see in the future, isn't it? Yeah? Right now you don't know what you don't know, do you? And it's like sailing a boat. If you go out sailing the boat, you can see the horizon, but then when you get there, you see another horizon. So as you're walking the journey from where you are to where you want to be, the more you can see and the more you can perceive that you can do and the more you can perceive that you can achieve, yeah? So right now, don't limit yourself. The sky's the limit from what you want to do. To accelerating your wealth, first you need to know where you are now, because if you're standing here and you're saying, okay, so where am I today? Because we need that starting point. If I said to you, if I blindfolded you and put you in the middle of the desert and said, get to Melbourne, what's the first thing you're going to do? Where the hell am I? Yeah? First question. Once you figure that out, then you know how to get to Melbourne, yeah? Simple. You just get the GPS out or go, hey, Siri, get me to Melbourne. Done deal. But Siri figures out where you are first, doesn't she? But what you need to do is do a few different things here. So some of the questions you need to ask yourself include, how much money do I require to achieve my goals? So what is your goal? Do I need X house or big house? How many children do I have? What kind of car do I want to have? Where do I want to live? What kind of income do I want? Where do I want to retire? Do I want to have holidays? What income is that? Is that $50,000 a year? Is that $100,000 a year? Is that $500,000 a year? But that's really what you need, isn't it? So to me, what I did when I was young, I actually got a journal out and I just wrote a story about my life. That's what I did. But it wasn't my life today. It was my life in 5 to 10 years' time. Who's ever done that? There's 2, 3, 4, 5, 6 of us in the room, 6, 7 of us in the room. Would that be a nice thing to do? Imagine that, sitting down in a nice comfortable space, grabbing a beer or a glass of wine, relaxing, and then just writing a story, and you are the main character of the story. And you're writing it in all the colour and all the detail and where you're going to be in 5 to 10 years' time. Because that's your goal, isn't it? That's your accelerating your wealth. That's where you desire to be. And then all it is you're setting your brain on a journey. Okay, and that's what I want. Now I'm going to go and get that. So that's part. What do I need? What do I need? How much money do I need to achieve my goals? How long do I want to invest for or trade for? Because once you've got enough money and you're generating income, then you can pull down the risk, can't you? In your earlier days, you take higher risk, maybe speculative stocks, maybe leveraging and things like that we'll talk about tonight and over the weekend. But when you're retired, do you want to take high risk? Well, you just want the income. You just want the income coming in because you don't want to, you want to enjoy life, you want to travel, you want to spend time with your grandkids or whatever and have that enjoyment because you've worked hard all your life. But how long do you want to do it for? And what returns do you need to get on that journey? Do I need to get a 5% per year, 10% per year, 20% per year? And we'll go through that over tonight and we'll show you different returns and what you can achieve. Thanks for that, Janine. I must say I love doing live presentations like that, and I know you do too. So let me ask you a question. If more of our students are 35 years plus, so there were people in that room, most of those were 35 plus. There was a few younger ones, as you know, 28, 29, 30 years old. And those, the 35-year-old pluses, they've got a sense of urgency as to why it is essential to trade the market the right way rather than just anyway. And I find a lot of people just do it anyway, or they just try it anyway to see if it works. Now, most tell us this is because they've been doing it the wrong way for a while. So my question to you is, do you think all of those 25 to 30-year-old guys that you mentioned that are watching our channel get the essence of what I was talking about in that video? Yeah.
Look, I think when you're that young, and I mean, I'm just thinking back to myself, I don't know that I would have either. Like, at 25, I reckon I would have looked, because I wanted to get into the technicals, give me the juicy stuff, I want to see how it works, show me how the market works, but really then what that means is that I was missing the big picture. And because I was missing and I realise now so much the importance of this when I'm working with people on a daily basis. And I find that some of the younger ones, they really challenge me on it, the importance of it. And then once they've done it, it's like a big aha moment. Something goes off in their heads and they just know exactly where they've got to go and what they've got to do. I think quite often when we're mentoring people, we've got to, I was going to say brainwash them, but it's not. We actually got to de-train them or de-brainwash them because of a lot of the decisions they make and what they're actually doing in terms of their trading. So we've actually got to get rid of all those bad habits that they've pulled out. And because they've been trying, they've been hit and miss for 10 years. And most of our, as I said, most of our students are 35 plus. And every single one of them, when we ask them, how you going? Except for the young ladies and guys we've got now that are actually doing the course, that are coming through a higher ed, and they're actually choosing the short courses. Oh, the ones that still at year 12 and everything else. Yeah, we're getting a few of those. But what I was getting at is most people in that 35 plus bracket, it's really now, they're now ready to actually listen rather than just hear the message. Yeah, and why is that? And it's time, because see, time is your most valuable resource that you have. Really, everybody's sort of focused on the money side of it, but really it's your time, because you can accelerate what you get in the end if you use the time wisely. So that's set goals for yourself and think about how you're going to accelerate your wealth. That's really what you're trying to say. Well, it was. I mean, just going back, just recent history, Bitcoin. I remember sitting with journalists, people who are the editors of business newspapers and everything else, and I was looking at those people and chatting, and I'm saying every phone call I'm getting from somebody wanting to trade Bitcoin or me to teach them to trade Bitcoin was under 35. And that's all I wanted to do. And at the time, that was the most highest risk thing you could possibly do, is trade Bitcoin. And nobody believed me that it was going to melt down. Not one person. And sometimes I spent half an hour, 40 minutes on the phone with people saying, Bitcoin will melt down. It will lose 90%, and it's not going to be too far down the track. And everyone kept saying to me, no, I'm watching the chat forums. The experts on there telling us what to do.
experts don't get on chat forums. It's simple, they don't. Experts don't have the time to do that sort of stuff. So it is one of those things that people need to listen and plan and get a good strategy, get a good process, and know for themselves why they're buying and selling, not getting other people to do or perceive to do the work for them, and really take control of their own money.
So let's now have a look at some more stocks. So what do we have next, Dale? We've got a few up there, haven't we?
We've got
BOQ,
so many
we got
chats.
from Rosie.
Yeah.
And Rosie's put a bank up. And actually, I noticed that someone talked about banks and whether banks should be sold and whether or not they should sell BOQ. Now, if you're asking me whether you should sell BOQ, that tells me one thing. And the first thing, Rosie, and look, awesome, I take my hat off to you that you're actually learning and interested in looking at this sort of thing, is that you don't, at this point, you probably don't have enough knowledge to have the confidence to be able to make that decision yourself yet. So that's what really your challenge is. Okay, BOQ, it has been falling, and this is a sort of stock that really has been a bit of a darling of the banks, and at times will lead direction in terms of if it's falling, the big banks tend to follow. If it's rising, the big banks tend to follow. But it could get out of kilter, right? And you can
Rosie's she's got positions in Big Four banks and BOQ, so she's done.
Yeah, well, that's
I'm not sure whether she doesn't say whether she owns all 4 big banks or just some of those. And
look, often people buy the banks for the dividends. That's just not, it's no secret. But the challenge is that you're buying, you're weighting your portfolio to one area. So this is where, when we're running people's portfolios, what we're looking at doing is having a balance across the sectors and looking for exposure in different areas. Even if you're looking for income, there are good stocks that can provide decent income in other sectors of the market. And this is what you're experiencing, because the financial sector's gone down because of all the changes that have happened and the restrictions with APRA on lending, and now the Royal Commission that's come in and what the banks have done. Let's not forget that. We can't just blame the Royal Commission for what's happened. We've got to look at the root cause. And right now, if I was holding this stock right now, which I wouldn't be because there's been so many reasons to get out of it, but it's fallen quite a long way, and I'd be watching to see if it actually could find some support and move back up through this high, because there's a little gap there on the weekly chart. But the challenge always is that it can always go lower first, and then you're sort of trying to second guess where the stock is. But I really like the $9 level for this stock. It could be an important level, somewhere around sort of $8.50, $9 moving forward for
I think it's a nice strong support level, but that doesn't mean it's not going to fall away. And
that's right. See, because the first hurdle for it to get through is, as I said, is that high. And the next hurdle, knowing your trend lines, if you get Dale's book, this is the one thing that banks that look really good with trend lines on them. You've got to get the trend lines on those particular stocks. And you can see there that it's got a long way to go to even start to look like it's going to turn around. It needs to get through that weekly trend line.
You took the words right out of my mouth. I mean, for $30, you get the answer.
Yeah.
And more importantly, you don't just get an answer, you get the answer that you can continually repeat yourself and know and give you more confidence. And just by buying a $30 book, to me, that's pretty much.
You've still got to decide at some point where you're planning on exiting a stock. Even if you are, new to trading, you've got to decide, well, if I've got stocks, what am I going to do? And I can remember holding stocks when I was first learning and thinking, I can't learn fast enough in order to work out how I'm going to manage my risk on the shares that I was holding. So there was some urgency in it for me to really get upskilled quickly.
I know, you bothered the hell out of me for ages. But just a simple $30 book tells you the rules that you need to understand and give you much more confidence. And so it is interesting that,
But look, I'd be waiting to see if BOQ, if I was holding it myself, is going to get through that level and start moving back up again. And I wouldn't be wanting to let it go too much lower at this point. So that's BOQ. That was from Rosie. We've got another one here.
We've got a bucket load.
We do. MFG was from Robbie. So can we see Robbie there somewhere, Robbie?
I'll find Robbie. Where is Robbie?
There's Robbie's first post up there. That was BOQ, was it?
No. I'll find him somewhere. You keep going on BOQ. I'll find Robbie.
Okay. Look, I need a better scribe here to write the details down so I don't have to go and search for it.
I think you wrote the wrong. Robbie Cremora. Look, he says looking sharp. So thanks for. I think he's talking about you, and I can't
He was
find.
going to blame it on me. I think you've written the wrong name, but it's his writing.
Here we go. Hey, Dale and Janine, what's your thoughts on MFG? Love your book. Thanks, Robbie.
Now, Magellan Financial, I'd have to say, pretty impressed with how it went through these resistance points here. Now, interesting that at the time, this could have been perceived to be a potential triple top.
Well, it could have been.
But now it's not. Obviously, it just proved to be resistance, and that's an interesting thing that we discuss, through with the training, is how to identify whether it could be a triple top or whether it's just a resistance level. And this stock's clearly still in a bullish phase, running up high. Looks great. Wouldn't be, if I owned it, wouldn't be selling it right now. However, I would be planning what I was going to do and have a risk strategy on the stock. I'd already know how I could exit, have a potential exit, but then sometimes stocks do some strange things when they're unfolding.
They do.
And so with experience, you can actually make your own judgment, weighing up everything you can see on the chart to measure it.
That sort of $35 to $37 area with the inside, outside, down
These
bar.
bars just here?
They're the areas where some of those people, but they don't know what to do, so they just sell.
Yeah.
And they just go, I don't know what to do. I've got some profit. I'll just get out of it, and then they miss the next run because they don't really understand.
Because it's run so hard.
Yeah, and it's one of those ones where I do get questions from people. So, what do you do when a stock runs hard?
Yeah, well, I guess the challenge is for people, and this is something that you guys might not be aware of, and you probably saw Dale put one of these on the chart last week of the market, is that a stock could fall between 25 and 50% when it has a pullback. So that's always the challenge for people who are in the know there.
I just thought, because we got that comment from Sam Draper, and because I just mentioned that thing about that period, and he goes, "G'day guys, can you share your thoughts on traders exiting their trades too early and share how to avoid this pitfall, what to apply in your stop loss to not miss out on potentially higher profits?" And I remember, So to me, it's about
when
having
people get out early, I'm talking about people who have absolutely no knowledge and they've just waited for the stock to go up for a couple of weeks and they're already getting
already out. They set profit targets.
Yeah.
And the goal of all the traders, let profit run, cut losses short to protect your downside. So really, to give you a full answer to that, you'd need to know all the techniques we teach, because there's difference between an initial stop loss and a trailing stop loss, and so they're two separate things. And stocks will move up they'll go from equilibrium, where buyers and sellers agree, to disequilibrium, where they get these breakout movements. So that period there around that $35 to $37 part is more of an equilibrium period, where buyers and sellers are sort of agreeing there in price, and all of a sudden one side takes over and bang, it gets into disequilibrium and takes off.
But it can run out of steam often, not
and it
long
can run
after
out of
that.
steam.
So there are the other people who think it's going to keep going forever.
Yeah, so you need to have some trend following rules around this so that you stay with the stock. And all too often traders have them way too tight, and so then they exit too early, then the stock takes off again, and then they go, oh geez, I just missed that run, I've just missed another 20 or 30%.
Yep.
But yeah.
So that was MFG from Robbie. Thanks very much. Now we've got KGN from Andrew Kogan. So
I've got to find Andrew now, do I?
Yeah, so we've got to find Andrew.
Don't touch my iPad, you'll knock it over
I'll
again.
go on to, I've just been told.
Andrew, hi Dale and Janine, what's your thoughts on Kogan? Andrew Carr. Thanks for the question.
So looking at Kogan, you can see there on the monthly chart, I think we actually looked at this early on in the sequence of the shows.
It was a few weeks ago,
Yeah, I can remember this big fall and looking at it that happened. So the stock has actually fallen dramatically, so 74% there.
I mean, that was after Amazon and everything else coming in.
Yeah, so where's Andrew on the... Oh, there he is in the middle there. Yeah, so looking at that, there is a possibility it could rise up somewhere around the $6 mark, and it's holding up quite well at the moment. So I would just be, watching. If you're not in, it's not a buy a signal to buy just now. However, it's a high risk proposition for anyone who was considering this. So somewhere between 6 and 7 is a potential if it gets going. And it's just at that level where it's got to prove itself, right? It's we'll quickly flick across to the daily. You can see each time that it's flicked up around this 450, 460 level, it stopped. So that'll be the true test for it, I think. So Kogan, and then we've got ALL from Peter. So we've got time for one more. And
Peter
then we've
Bush,
got
hi Janine and Dale. So I found that one quick. What are your thoughts on Aristocrat Leisure? So thanks, Peter.
Look at it. Aristocrat Leisure has had a great history. You can see there on the chart it's had a really big run.
Magic stock.
It has actually pulled back for over this period from the high in July 2018 through to December. Now most stocks pulled back during that time anyway, so it's sort of when you look at a pullback, you need to look at, is it a market pullback or is it a stock specific pullback? And this is actually a market related pullback, and now we're seeing the rise back up. But note that our market has been significantly stronger than this stock in rising out of that low, so it is a bit sluggish on the move up. Could get to somewhere between 28, 29, but obviously previous resistance you've got to watch out for.
And it's a bit of indecision on that one too.
So see that at $26 around there, it's really been struggling over the last couple of weeks to push through. So that's what it needs to get through to actually prove that it's going to go on and head up to these next levels overhead. So that's ALL, still looking okay at the moment. If it pulled back, then obviously you'd be watching your stop loss, whatever you decide to set, but always have a stop loss. And 22.67, if that's within the percentage that you want to allow for your stop loss, then that would be a reasonable level to confirm that it's then going to go down if it trades below that. So do we want to move on now and bring up a comment from Ben? And we'll have a couple more comments from the chat.
So the first is from Ben, who writes.
So he writes, great show, Dale and Janine. Just wondering what software or website do you use to analyse stock charts like your charts?
Good. The software on your screen is Optima, but it used to be called Market Analyst. I've been using it since, I don't know, since Adam was a boy. Last century. It sounds like a long time ago, doesn't it?
Yeah, I think we had the first version that came out, didn't we?
Yeah.
Version 1 or 2 or something.
I did, but it's now called Optima. But we don't use, we use a charting package. We don't use platforms, I suppose. And one of the common questions I get asked by traders who are inexperienced go, what platform do you use? Thinking like ComSec or, Plus 500, all these sorts of platforms. And platforms, to me, are something that I say to people, when you're trading on a platform and you're doing your analysis on the platform, you're just playing cards with your hands on the table with the broker, especially not so much when you're trading ASX traded shares where you got the exchange in the middle of the trade, but definitely if you're trading FX or some sort of over-the-counter product where you're talking about CFDs, FX, commodities, those sorts of things, where you're using a market maker. If you're using a market maker and you're doing your analysis on their platform, then you are seriously hindering your ability to make profits on the market, because you're just telling them how to take your money, and that's their job, is to take your money. So they'll be watching what you're doing, and they have different classes of clients in there, so they'll requote and do a whole range of stuff. We do all our analysis on Optima, and then only then, when we've decided what we're going to do, is then we open a broker portal and place the trade closer straight down again. So you need to be watching what you're doing.
Do you think we should show them an example of what we do next couple, or maybe in May?
No, maybe.
Do a bit of a special?
If they ask nicely. If they put their hand up and ask nicely.
Because we're showing you a chart, but this is a blank canvas, basically. When I'm looking at it, because of my knowledge and experience, and same with Dale, I'm seeing all of this different analysis on it without actually putting it on the chart. Yeah. But we need to make it simple for you so you can understand, because if I put a whole lot of data on that chart, and some of my charts can get pretty
messy,
untidy, and then this is the great thing about this software, because you have all these great layers, and that's what I each day when I'm working with clients is encourage them to set up these layers so that you've got different analysis, like your trend lines in one layer and your different strategies in different layers. It makes it so much easier to hide things and then bring things back up.
I mean, to me, this is a great software program and a program that we use. But if you're a beginner, it's way overkill for you. You don't need a software program like this. This program will cost you, I don't know, $1,500 or something like that, and then you've got to pay for your data feeds and everything else.
Well, you can use the program, but then you're not going to be. I don't even use everything that's on it, because it's just not necessary. I mean, you look at, there are particular tools and features that are really important to making money, and the rest is sort of academic and can be. Do you want to become a boffin and a scientist understanding all these different tools and strategies and processes, or do you want to learn how to make money and find some really good tools to use?
I always think about keeping it simple.
Rules, I should say. There's tools and there's rules. Tools are in the software. The rules are what you have to learn.
Yeah, but if you're an investor, you don't need a software program like this. If you're a beginner trader, you don't need to go to the expense. You're better off getting the education first, because you don't buy, a plumber doesn't buy their tools before they actually learn how to be a plumber or a carpenter.
Well, they buy a few. I mean,
Yeah.
they get a few. They've got to have something to do their trade. But then you're not going to go out and buy, the best tools when you're first starting out, because you're going to wear out your drills and all that sort of thing really quickly because you're not doing it properly initially. So like Dale's saying, it's about getting that training, and it's so important to get the right training. Can you imagine if you were working with some sort of haphazard tradesman, and he was your mentor when you're first starting? You develop bad habits, and it's really about getting behind someone who's been doing it for years in the right way. I can remember talking to a young guy who was in a trade, and he was telling me what some of the things that his boss was doing, and I said to him, look, it's not my position to tell you what to do because you're not a relative of mine. However, I said to him, if I were you, I would move on to someone who's going to teach you right.
Teach you better. But when you talk about that, I just recorded a podcast the other day, which will probably go up in the next week, and it was on. I just got one of my GAN books, and I just read the preface, and I talk, and this is a preface that he wrote in 1923, so nearly 100 years ago. And I was just saying, I was making a correlation to today, saying everything he's talking about then still happens today. And one thing he talked about, he said, to shorten it, he basically says, it's amazing how people, if their plumbing doesn't work, they'll call a qualified plumber, or if their electrical doesn't work, they'll call an electrician. If their car doesn't work, they'll call a qualified mechanic. But they seem to think that their money doesn't deserve somebody who's just as equally qualified, and that they're leaving their wealth up to somebody who's completely unqualified. And that's still the case today. We still see the same things, And so to me, it is really interesting reading some of those things from some of those really old masters, and just going back over that game, bringing yourself back to reality. Yeah, that does happen. So, but now there's also, whilst I'm talking about that, I remember there's a couple of things I actually wanted to mention while I've got a little bit of space before we look at some more charts. Now, the first is that we've had a ton of inquiries for our courses, especially the past week, as a graduate of ours was on ABC's 7:30 report last Wednesday, wasn't it? Something like that. Sue Allen was on there, and I was on Studio 10 yesterday in Sydney. So if you were one of those inquiries and you're new to our channel, hey, fantastic! Thank you very much for visiting us tonight. Hope you're enjoying the show. So welcome on board. So, but if you're one of those people, one of our traders and mentors will get to you shortly to help you out and answer your questions and just see what the journey could be for you. So just talk to them about what I've been doing in the past, what could be doing, and how I can move forward and become a better trader. So just be patient. The guys will get you. And I mean, we had a lot of people come to our website because of those two things. And so if you don't want to be patient, just wait, and don't want to be contacted. Sorry.
Well, what if you don't want to be patient?
If you don't want to be patient, my tongue tied. Just give us a call, and we can help you out then anyway. So I've also had quite a few ask me in emails and over the phone about funding for our courses, because people say, hey, how do I fund your course?
It's a challenge for some people.
And it is. I mean, Vet FEOP got pulled a few years ago and closed down by the government, so how do we actually do that? So in our response to that more recently, we've just launched an interest-free payment plan that just makes sense, and it seriously makes it really easy for you to start now and pay later. And why shouldn't you be able to take advantage of the great market conditions we're seeing right now, and what Janine and I think will happen ongoing for the rest of this year in the bull market, and really get that portfolio of yours humming to make it fair. Funding is now available on all of our courses, and I believe that getting going, once you get going, I think it's around about $55 a week roughly, and so it's, I don't know about you, but it's a real no-brainer to me. I mean, getting on our Trading Mentor course if you want something a bit more beginner, or our diploma if you're super serious.
Yeah, the Trading Mentor is a good way to actually find out whether you want to continue your education with us. It's not a huge investment. It's probably one trade would cover it.
Everybody's telling us one trade, they're paying for that. It's just pretty simple. But there's one more thing. Just remember a few weeks back, I was asking for 10 people to work with me to become great traders. You remember that? Yeah. So I did that on one of these videos. So I was doing that and give them the tools and work with them to become great traders. Well, because of this payment, the new pay now, blah, blah, blah. Oh, sorry, no, what did I say? Interest-free.
Interest-free, yeah.
Things
Now
I
it went
can't
crazy.
remember.
And they're all saying, can we also have the mentoring as well as the interest-free.
Yeah, so I've just started the process with the people. So I've sent them the first emails, and I'm going to be calling them over the next few days and having chat with those people. And they're really excited about working with me to become great traders. So I thought that with this new interest-free offer that I'd offer it for 2 more people. That's it. The opportunity to work with me over the next year as they move through our diploma course.
2 lucky people, you better get
Only
in quick.
2. So, because I can't handle that many people personally. I mean, I do have a team, but this involves me contacting you and talking with you and working with you. And obviously, Janine gets involved in it as well. So a little bit more later on in the process, Janine will get involved with it and mentor you with myself. So if you are interested and you are serious, you have to be serious about being a great trader. If you're not real serious about it, then it's no need to email us at info@wealthwithin. 2 people only. So, but in the title, I just put 10 traders. So info@wealthwithin.com.au, and in the title, put 10 traders.
Now, this is something new and exciting, and I know I'll be helping out and working with you guys if you sign up as well. So it's really exciting for me because I just really enjoy seeing people come along. And once you tell me what your why is or the big reason that you want to do this, I get... And often I talk to people, and some of you may be listening out there, and we've had conversations, and you'll tell me one version of what it is, and then when we chat a bit further, you just open up to me, and that is the gold in it. That's what you need to really get what you want. So
one of our guys today rang me, and I was talking to him, and he's just finished module 3, and he goes, "I'm loving you being my unreasonable friend." And that means if he said his goal, and I make sure he gets it, and that's really what I do. So we got some more stocks?
We've got some more stocks to look at. So let's have a look at, we've done ALL, so we've got NCM there. Gold stock, gold's been going up, as you know, so this stock has been riding on the wave of that. Peter Bush asked for this one, so thanks Peter for...
Peter Bush, if you have time, look at CSR. No, another one.
That's another one, so he's typed in again.
There we go. Can you also have a look at NCM? Looks about to break out of a long-term sideways move.
Interesting, because yeah, long-term, yes. I'm glad he mentioned that, because long-term it's already broken out of the pattern that's on that sideways move, which occurred in January 2019. But rightly, you're pointing out that there's resistance across here. So historically, you can see that resistance there. It has actually broken above it. And often when stocks make peaks, they can shoot through what is the real resistance level for the stock. So it can be a bit deceiving because you might be thinking, oh, it's got to get through here first. But the bulk of that level is already passed, so it's actually just above it. But often when stocks make these dojis, now you can see these little candlesticks we cover off in the course. Now once we get these little dojis forming where the open of the week is actually at the same level as the close and it's at the bottom, we can see there that there's resistance all the way across there on this short-term sideways move. So this is where the stock really has to prove itself and get over this hurdle here now. And looking at that, it may do so. It's still got a higher trough there. You can see that week down, 5th of April 2019 was higher than the last one, so that's a good sign. But just watch that level, because if the stock trades below it, it could trade down short-term and then break this low here. So a nice trend line. If you're practicing trend lines in the book, this will be an interesting one. See if you can draw a trend line up that rise and get it in there and tell us how you go next week.
Cool.
So that's NCM.
We've got a couple of comments here. We've got Simo says, "Hi, I'm watching LVT. It seems to be rising, but after your talk yesterday," assuming he means the stock market report, seeing it's a small cap, what's your views? I don't think we've got time for LVT today, but if it's a small cap, probably my views are going to be not be in it. From that point of view.
So let's have a look at Macquarie.
There was another good question here.
And 50% fall. Who said that? Oh, they're just having a conversation there, Shane. And
Nicholas Kane said, "Hey Dale, any plans your book get on the Google Books platform?" I didn't even know Google had a books platform. So
we'll find out.
So the answer is absolutely no. I don't have any plans, but I'll get my guys to have a bit of a look at it. But I think you can get it on some sort of Kindle book. I know you can in my American version. There's a Kindle one you can download off Amazon. If you've got a Kindle, but I don't know about Google Books. I've never seen it before. So, wow, there's a lot.
Now I've got an ARB as well. So we've got a couple more lined up here. How about we just look at Macquarie, because that was one that a couple of people asked for. I think it was Guy. Guy had asked for this one. Now Macquarie looks fantastic. I'm really liking the fact that you're picking a much bigger liquid stock. Now see how we're looking at those highly liquid stocks earlier, and we're looking at now a quality company, and it has gone ahead in leaps and bounds. This is a stock that can perform really well at times, and you can see that it's doing that again. It is slowing down a little bit now because look where we are. We're making new all-time highs again, so you might see that happen on Macquarie, but it's definitely in favour compared to the other big banks, which are still out of favour at the moment and is getting a lot of attention because of that. So this is another example of what Dale showed before, where the stock temporarily slowed down, and then it's kept going.
This
for
is the
another
best
3
performing
weeks.
bank since the GFC.
Yeah.
By a mile, by a country mile. So it is looking
So still
really
liking Macquarie and Bellamy's. I think we talked about. We've talked about every week for the past few weeks, I think.
nice. I know.
So this is a popular stock. Now look at the monthly chart. It's reversing now. On that monthly chart, look at where the opens and the closes are. That's really important to understand the psychology behind the people trading it and what they're thinking. Now, it is slowing down the fall this week. So you can see the range of the bar, but it is only Tuesday. So I'd never really make a judgment on what a stock's doing or get excited or or look at it and think, okay, that might be cause for concern. It's all about what happens towards the end of the week. So Wednesday is interesting, yes, but Thursday is really important to see what happens and obviously the close at the end of the week. So I wouldn't be, if you're in the stock, I wouldn't be concerned about it at the moment. Remember, what's your exit strategy that you had on the share? What's your stop loss? Am I still within? If you trigger your stop loss, then you need to get out. That's just it's based on a rule. So when we first trade a share, we have an initial stop loss, and we also have a trailing stop loss that we set, which is based on doing back testing over the history of the share. So when I'm doing analysis on a share, I'll do a full analysis on the monthly chart to understand the big picture environment first, and then work towards the analysis on the weekly chart and do back testing on the weekly chart to find the strategy. So if the exit rule hasn't triggered, then just keep going with that with that stock. So Bellamy's still looking okay, but it's just coming back for a couple of weeks for a breather at the moment. And ARB Corporation, which we just had as one of the last ones, and that came from Mick King. So guys, can we get your views on ARB? Would a break above 1830-ish be a level to watch? Oh, we've even got a level from somebody this time. Now look at the resistance across there. So last month, the stock went all the way up to a high of 1832, and then it closed low. Remember what I was talking about with the psychology of the bars and where the opens and the closes are? See how it's come back there? It's almost like it was shy. It's tried to come up, meet the levels that it's traded before back in 2016, and then pulled back for a little bit. Still, it's not out of the question for it to keep on going up. It could end up at the next short-term level of resistance around that $20 mark. But it needs to obviously prove itself on the weekly chart. Bit of sideways consolidation there. So sideways consolidation is when you're getting bars trading with within roughly the same range. So that's an indication of a sideways move. First thing I want to see is for it to get through this point here, and then we're more likely to see it move on to the next level up here. Watch closely.
Just to wrap up a little bit, so we've got a couple of last things. Barry Ward says my book's definitely on Kindle. And Steve Gray says look into Smashwords as an ebook platform. Oh, okay, that's interesting. They can put your book on a range of sites in one hit, from Apple, Amazon and beyond. Steve Gray must be a good looking dude like me. He's pretty intelligent. So that's pretty cool. So we'll have a look at it anyway. But it is an ebook on Kindle, so you can get it off that anyway. But if anybody's bought my book, please put some what do you call it? Rank it. On some of these sites. It really does help. I mean, Janine and I want to keep doing these shows for you, but we do need your help to keep passing the word on, because the show needs to grow. And the more people that buy my book, the better. That gets more that message out there, and people trading better. That's really our goal, to do that. So we need that message.
Yeah. So what do you want to see more of as well? What will get other people onto the show? Let us know. Look, Dale, thanks for tonight, and a couple of the ideas that you had there with the poll. That was really interesting.
Yeah,
People
I loved
enjoyed
that. That was
it.
really cool.
And thank you all for participating in that. We really appreciate that. And that's all for the charts for now. We had lots of great comments on the chat tonight. It's awesome to see people out there so keen to understand the market.
Especially those new ones. The new ones, yeah.
But I'd like to challenge you, particularly those people who didn't make a comment over the next week, to remember to think about what you'd like to raise on next week's show.
Now, Janine's got your name on the chat thingo. She's going to hunt you down on Facebook, YouTube, Twitter, Tumblr, whatever it is, Stitcher, Grindr, I don't care what it is. She will find you and hunt you down and make sure you do comment next week.
I know that everyone... Look, one thing that I've learnt over the years is that everybody takes their own time to come forward when they're ready, and I understand that. For those we didn't get to tonight, I sincerely apologise about that, as we cannot always cover everything, even though we try to. Even if I take the control and Dale's, while he's doing something else, I try to give you a few extra stocks in there.
I know, you stuck a few extra in, didn't you?
That said, if you continue to post on future shows, we'll do our best to spot you and respond to your comments. So thanks very much. Well, everyone, that brings us to the end of our show. And once again, we really hope you enjoyed it. As always, we really appreciate you sharing your valuable time with us. And we hope to see you again next Tuesday at 7 p.m.
We'd love to get your feedback on tonight's show. So please send us an email at info@wealthwithin.com.au and just type in Wealth Within live in the subject line. And also let us know if you have a question or perhaps there's a particular subject that you'd like us to cover in next week's show. We're happy to take requests at any particular time.
Now, before you go, like this video now, and please, you do need to subscribe to the channel so you can keep up to date. So make it easy. Do it now whilst we are chatting about it. It's nothing like the present. Just as important, make sure that you get online next Tuesday at 7 p.m. We'd love to see you again. Goodbye, good luck and good trading.
See you guys. Good night.
Bye for now.